Okay, this is a question 6 for the trial balance, income statement, and the statement of financial position. Okay, let's prepare the trial balances. Trial balance at 30th June 20-8. So the item in here we have, let me put in the number first. Debit, credit, and then capital, drawing, and then premises, feature, revenue, purchases, and then inventory, 1st July 20-7, and then carriage inwards, carriage outwards, and then trade receivable, trade payable, discount, receive, insurance, sundry, expenses, and then wages, rate, loan, interest, and then long-term loan from ABC loan, and then next is that cash at bank. Okay, now we put in one by one. So let's see. Okay. For the capital is in the credit side, and then drawing is in the debit side, and then premises is asset is in the debit, feature is asset also in the debit, revenue is in the credit, and then purchases is in the debit. Next is that inventory is an asset, and then carriage inward is a cost of sales, carriage outward is expenses, and then trade receivable is an asset, and then trade payable is liability, discount is other income, discount received is other income, and then insurance is 390, sundry expenses is expenses, wages is also expenses, and then rate is also expenses, long-term loan, I miss out. Okay, loan interest, this one is expenses, and then long-term loan is liability, cash at bank, this is an asset. Okay, so now add the total. Okay, the total will be 154,000. Okay, the amount debit credit are the same. That means most probably correct. Next is that they want to prepare the income statement. Okay, so income statement, we differentiate the item with the financial statements first. Okay, this one is under SO. SOFP. This one also SOFP, SOFP, SOFP. This one is under income statement. This one also income statement. This one under income statement. And then carriage inward under income statement, carriage outward income statement, trade receivable under SOFP, and then trade payable also SOFP, discount received under income statement, insurance under income statement, sundry income statement, wages income statement, rate is income statement, in loan insurance, loan interest is also income statement. This is liability SOFP, this is SOFP. Okay, now we go to the section, account section. So what is the account section for each? Okay, capital is under capital section. Drawing is also under capital. Premises feature under non-current asset. Non-current asset. Revenue is under the revenue section. And then purchases under cost of sales. Inventory opening, close, cost of sales. Carriage inward also cost of sales. Carriage outward is expenses. And then trade receivable is a current asset. This is on current asset. Okay, trade payable is a current liability. Discount receive other income. And then insurance expenses, sundry expenses, wages expenses, rate expenses. This one expenses. Okay, next is that long-term loan, non-current liability. This one is current asset. Okay, we categorize done. Now we go to do the income statement for the year ended 30th June 20-8. Okay, minimum 2 column. So I put 2 column. So start with the revenue section. And then revenue, we have only one, 82,000. So 82,000. And then less cost of sales. Cost of sales. So our cost of sales is that, let me see, what is the cost of sale item? Opening inventory. This is opening inventory. We have the purchases, and then we have carriage inward, and then, okay, let's we put in the amount first. Inventory is 18,000. And then purchases is 70. And then carriage inward 400. Okay, we add the total. Okay, we get this amount. Okay, now less inventory at this is the closing inventory 20-8. So this one is 20,100. So we take this minus this, so we get, okay, now next take the revenue minus this one, we get gross profit at other income. We only have one other income. So other income is discount received. Okay, the discount received amount is 210. So we plus these two. Okay, next is that less expenses. Okay, what are the expenses that we have? Let's see. Here, carriage outward, one of it. And then, okay, here, insurance. Okay, insurance, wages, and rate. Loan interest don't put, don't put under expenses. So carriage outward is 1,005. Insurance is 3,900. And then sundry expenses is 3,400. And then wages is 1,000. Okay, and then rate is 1,002. So all this one you add the subtotal for the expenses. Okay, take this one minus. Okay, we sounds that we get negative. So in this case, we got the loss from operation. Okay, this is a loss. So in account, we don't put negative sign. So what we got to do, you want to put, you put, okay, 520, put bracket. Okay, don't put negative sign. Okay, now next is that less bank loan interest, because loan interest, the new syllabus is minus after the profit or loss from the operation. Okay, so there is a change of the syllabus. So 500. So this one minus, so you become negative. So negative 1,000. So negative, we put bracket 1,020. So this is the amount we should get loss. Loss for the year. Loss for the year. So this is the amount. So basically, not much issue for this question, except take note, the new syllabus, loan interest is minus after the profit or loss from the operation. Okay, now we go to the statement of financial position. Statement of financial position at 30th June 20-8. So total, this one 2 column enough. Don't need to be 3 column. Start with the non-current asset. This is a fixed position or non-current asset. We have 2 non-current asset, which is the premises and the feature. Okay, this one we underline it, the header. So this one premises is 30,000, and then feature is 4,000. So plus together, so this is 34,000. And then next is that we have current asset. So our current asset we have, let me see, current asset, here trade receivable, and then cash at bank. Okay, these 2 items. So here trade receivable amount is 114, and then bank is 19. Okay, only these 2 amount that I see. So plus these 2. Okay. Now is these 2 plus together. And then next is that capital and liability. So capital and liability is, we have capital section with the opening capital. Our opening capital is from the trial balance, which is here. Okay. And then because this question we get the loss, so you have to minus loss for the year. If you get profit, you plus, but this question is a loss. So loss by how much? 1020. Okay. And then we also had to minus the drawing. Okay, this drawing amount is 1,003. So we take the capital minus and minus. So we get 52,000. So next is non-current liability. Non-current liability. Okay. Non-current liability, we have loan from this one. This is a non-current liability. Only one item we straight away put on the second column. So 10,000. And then non-current liability, after that is a current liability. Okay, our current liability, we have, let me see, what are the current liability? Okay, trade payable. So this is a trade payable. So we put into here. Also one item we straight away put into the second column. Trade payable 8,000. Okay, that's all for it. Now we add these three items. So we get this amount. Okay, 78. Where's my mistake? Wait, oh, sorry. This one should be minus. The drawing is 1,354. Oh, I forgot. I will miss out one of the item. Here, one of the item the inventory, the closing inventory. I miss out already. Okay, inventory, which is this one, 20,000. Had to put into current asset. So this one, I should plus the closing inventory. So the answer same already. So the accounting equation same. That means the account should be correct. Okay, that's all.